Please give a heading in your notes. Long-term contract. Long-term contracts. And then maybe you can make a flowchart like this, that we have two methods. The first method is percentage of completion method, and the second method is completed contract method. This percentage of completion, you can give it 3 stars. This is a relatively important part of the reading. Let's understand what this really means. Let's say a company takes construction projects. Okay, so let's say L&T has taken a new construction project. The project is to build some dam, a dam on some river, let's say in Africa. Okay. The revenue that L&T would be getting on account of this project is 1000 crores. Okay, the revenue which would be given by African government to L&T would be 1000 crores. The duration of this project is going to be 5 years. L&T would take 5 years to finish the project. This is year 1, this is year 2, this is year 3, this is year 4, this is year 5. The cash given by the African government to L&T, 600 in time 1, no cash in year 2, 3, 4, and 400 at time 5. Total cost which L&T expects to incur on this project is 800. The question is, when L&T is preparing its financial statements at the end of year 1, what is the amount of revenue it should disclose in the income statement on account of this project? Should it be 1000? Should it be 600? Or should it be 200? 200? Equally, we should divide it equally. Yes? Is there any other way? What is my revenue earning activity here? Building the dam. Now, do you think every year we will build exactly the same proportion of that dam? No. So how it is to work earlier, that you go to a chartered engineer. Okay, you hire a chartered engineer. He will do an assessment of what proportion of project you have been able to complete. Let's say if he says 20% or 25%, then you recognize 25% of the revenue. The difficulty in this method is that there is a possibility of manipulation. Right? So this year I am short of revenue from other projects, so I give the chartered engineer some higher fees and I ask him for a certificate of 60% this year itself. Right? So instead of that, what accounting standard propose, they propose a method to calculate percentage of project completed, and that method is cost incurred this year as a proportion to total expected cost. For example, total estimated cost by L&T is 800. Let's say we have a cost schedule now. First year they expect to incur 400, then 100, 100, 100 and 100. That's how a total cost of 800. So we can calculate a percentage of completion based on this data. Cost incurred this year 400, total expected cost 800, which means this year we have finished 50%. 100 as a ratio to 800, this year we finished 12.5%, 12.5%, 12.5%, 12.5%. Then based on that we can have the amount of revenue. Okay, please observe carefully, you can write later on, I'll give you sufficient time. Amount of revenue would be 1000 crore into 50%, 500. 125, 125, 125, 125. This total was 100%, this total comes out to be 1000. Based on that we can have amount of profits. Profit would be expense of 400, revenue of 500, profit of 100, 25, 25, 25, which will give us a total profit of 200. We can also have a asset and liability schedule here. I have made sales of 500. How much cash client gave me? 600. How much did I receive extra? 100. Is that asset or liability? Liability. I have received extra, that's a liability. So liability of 100. In first 2 years, I have made sales of 625. How much cash I have received? 600. How much less I have received now? 25. 25 worth of an asset. I have made total sales of 750 in first 3 years. How much cash did client give me? 600. How much less? 150 asset. Total sales of 875. Client gave 600. Asset should be 275. Total sales of 1000 so far. Total cash of 1000. Asset or liability? 0. This method is called percentage of completion method. Easy? Okay, so write down the example now.